Okay, so while we wait for attendees to come on in, we can chat first. I think we'll give them about 2 to 3 minutes.
Yeah, no problem.
We'll be able to start once the people start coming in. So I think right now they are all getting the alerts. It's like cool. Yeah. So do you cook a lot? Out of curiosity,
Yeah.
You do
almost every day.
Wow. Okay.
But it's exhausting to do that. It's exhausting. I try to cook, a big plate and save for like 2 days. So maybe the next evening I can just keep on, noodles or something. Otherwise, it's just too exhausting.
Yeah, I think it can be sometimes a bit challenging as well. But right now the weather's getting much colder. Where I am right now, it's 15 Celsius. So I do not know. Are you in the CBD area now?
No, I live in northern suburb, so also very cool in my area. So I'm having hot pot tonight at home.
Yeah,
I got lots of seafood already.
Oh,
right after this.
Tapilo is going to be really good this time.
Yeah, have to.
Well, good evening, ladies and gentlemen. Thank you so much for tuning in today. Today we actually have a very interesting guest on a very apt topic, and we will delve into that shortly. We are just waiting for another minute or two to allow people to tune in. And if, for instance, you have any questions, let's go through the basics. If you have any questions per se, there's a chat button to raise your questions. You can also reach me on my mobile, 0409. Oh, goodness, I'm almost getting mistaken now already. 0407 540 768. That's my number, so you can send me a WhatsApp message as well. Or make it easier, put it in the chat box. I'll be able to take it up with our featured speaker tonight, who's basically Monique Jiang. So Monique and I have been chatting a little bit earlier to just get ourselves ready for this session. And we believe that this topic, after lots of discussions and what we've seen, right, Monique, over the last maybe couple of months, the topic of real estate in Melbourne in particular has been very, very hot, should I say?
Yeah.
Yeah. So I'll get into this shortly. And what I can do right now, or what I want to do right now, is actually to read a little bit or to tell you a little bit about Monique. Now, Monique Jiang, she hails from Guangzhou. She has a master's degree in professional accounting and is the co-founder and senior credit analyst at QA Finance Private Limited. She's been in Australia for nearly a decade and has a lot of experience in the field of mortgages and financing. On a personal level, I've worked with Monique to aid overseas and local buyers secure the right mortgage package for their property purchases in Melbourne, and know that she not only goes the extra mile, she will go two, because she really believes in great customer service. So thank you so much for taking your time from this very chilly evening, Monique, to join us.
Thank you very much for inviting me in. Very nice to see like all those audience on the other side. Good afternoon to all of you, although it's late afternoon in Melbourne already. Yeah, so we are going to chat about regarding the property market with the opinions from you as well. And also we'll chat about definitely the mortgage solution to help overseas buyers and what extra crucial parts to pay attention to when we apply for a mortgage.
Absolutely. And ladies and gentlemen, the reason why we believe this topic is very apt and why Monique is the preferred speaker for tonight is because, number one, we've seen an increasing amount of interest in the Asian buyers across Pan-Asia towards Australian-based properties for multitude of reasons, be they for retirement, wealth planning, or even children's education. But the biggest stumbling block most of the time is that they may not necessarily have the right information or the complete information to follow it through. So it's not just in finding the target property, it's actually having the correct procedures and the necessary resources to carry it through. And Monique, I believe, has the most apt information to help you with a major part of this decision, which is getting the financing ready. So ladies and gentlemen, without further ado, what I'd like to do is to invite Monique to start the presentation.
Okay.
So Monique, whenever you're ready, I flashed your presentation up already.
No problem. So thank you everyone for having me here as well, Ernest. So today, this live webinar, actually there will be two major parts. And then, first of all, like a little bit introduction about myself. So just now Ernest did that for me as well. Thank you very much. So I am a mortgage broker based in Melbourne. I've been working in this industry since 2018, and then now I had my own broker firm with my business partner. So my contact detail is in here, and it will be in the last page as well. So welcome to contact me if you would like more about applying for a mortgage in Australia after this webinar. So there are two major parts, as I say. First of all, I would like to talk about something regarding the mortgage climate in Victoria, the real estate market, and the mortgage loan analysis. And the second part would be the major topic regarding overseas investor loan solution, regarding lender selections and their policies. So about the mortgage climate in Victoria since late 2021 and early 2022. First of all, it must be a very challenging period since early 2020, especially in Victoria, because we all know since the beginning of the 2020, we had COVID all over this world. And then there has been some big lockdown periods in Melbourne. And but we all know that since late October last year, the COVID restrictions has started to be eased in Victoria and also in all over Australia as well. And right now we can see the mortgage industry and the real estate market industry right now is actually becoming much better than before. One of the reasons is because of the restrictions being eased. More people, including local people and international students, temporary residents, are coming back to Melbourne to work, to live, and to spend money whatsoever. So, and also, Australia border has been reopened, as we said, since early December last year. So right now we can have more tourists coming to Australia more easily than before, with more working holidays and other temporary residents holding their working visa and other visa, and international students or new migrants coming back to Australia. In inner city rental markets, I mean, especially for Victoria, this market we believe is highly relying on temporary residents and young local generations, including office workers. This market is actually highly relied on these people. So during COVID period, we can see the vacancy rates was being very high during those periods. But right now, like I will elaborate in the next slides regarding the vacancy rates. Right now, we can see it's already happening. The vacancy rate has already gone down a lot, and it's foreseeable that this vacancy rate will be down further in the coming 12 months. And with the vacancy rates decreasing, and there is just that much of available properties in the city and the nearby suburbs like Docklands or South Melbourne, actually we can see the rates is already jumping. The rent is already jumping, and it is believed that people are predicting there will be another 15% increase in the coming 12 months. And the other reason why the inner city real estate industry, we believe it will be booming further, is because there is a lack of new supply. There's not much apartments or projects ongoing in inner city Melbourne anyway, because there is no new lands. And especially, even though there are ongoing projects, those developers, they are keeping them on hold because of COVID, because they are still waiting for ships to come for their material, or because of other reasons, they are delaying their project, and the construction is being very slow, also due to the lockdown before. So we believe that in the future, there will be the new development projects for the new apartment buildings, the number will be massively decreased. Before in 2016, once there are actually more than 20,000 new apartments completion, only by 2016, but this number will be massively decreased to below 1,000 by 2024. So that's why we believe the rental market in inner city Melbourne will be booming, because of there is not enough supply, and also because of the migrants and also local people are moving back to these suburbs. So regarding the vacancy rate, I gave some examples in here. We can see that probably not very clear, but we can see that in Melbourne area, South Bank, the vacancy rate in February is actually going back to pre-COVID period. It's actually could be better than the pre-COVID period, to down 2%. Usually we believe around 3%. That means this market is in favor of landlords. But right now it's even lower than that. We can also see in Docklands and in Carlton as well. Is now they are all below 3%. So we believe right now it's actually already happening. The rental market is already in favor of landlords. There are also other driving forces to help with the real estate markets in Victoria. Actually, it's happening throughout all Australia as well. Regarding these factors I'm going to talk about, one is the inflation. So we all pay attention to right now the everyday cost in Melbourne. I'm not sure if everyone's feeling the same in other countries as well, but I believe very similar. We are like, people are saying that a cup of coffee in Melbourne will be costing more than $7 by the end of this year, but right now it's only like $4.50. So we can all see the living cost is getting much, much higher because of inflation. And even though the government is trying to do something to help with that, it will be a little bit challenging anyway. But for inflation, is not necessarily a best thing for investors, especially for real estate investors, because of inflation, that means the market price would go higher. People are more confident to buy. They're happy to pay more. That's why we can see that the housing cost is already increasing starting from mid last year because of inflation, basically. And the other reason is also caused by interest rates. So Australia, the RBA is actually reducing their cash rate since late 2019. Before it was 1.5, but they gradually decreased their cash rates to 0.1% only since the mid 2020. And now they are still keeping the cash rate to 0.1%. People are saying that this will be increased to 0.5 by the end of 2022. But right now, most lenders, local lenders like tier 2 banks or big 4 banks, their variable interest rates are still very low, which is one of the reasons why people are still very keen to buy, because they're rather to allocate more of their assets to real estates. And this is a good factor with the help of low interest rates. And the last factor I'm going to talk about is the federal budget. Federal government of Australia just released their new budgets for the financial year 2022 to 2023. They are going to put more money, actually $2 billion, to boost the first home buyer real estate solution. So with more first home buyers being able to get help for the government, they will be able to just use 5% deposit to buy their first home. But there will be definitely price cap. So right now, the price cap for Victoria is no more than 700 grand. So that means actually this price cap is in line with the new apartment markets in inner city suburbs in Melbourne. So that's why we believe there will be more competitions if overseas investors are going to invest in apartments or townhouses in inner city suburbs within this same price range. So for this price cap, actually the government will be able to review it later, because right now, as we all see, the house price has already gone up in Victoria. Right now, the median price for an apartment or for a house in Victoria has already gone up to 780 grand. So the price cap being 700 grand is believed will be reviewed by the government soon. And then the next part, we are going to talk about the mortgage solution for foreign investors. So first of all, regarding the lender selection, basically since 2017, Australian local banks have stopped accepting applications for pure foreign investors because it's not within their policy. So actually, if foreign investors are going to apply for a loan, when purchasing an property in Australia, the only solution they can go to is financial institutions. So regarding financial institutions, there are still many of them in the market. And then the solutions is actually quite similar. I'm just like taking one as an example. So usually the most important part people pay most attention to is the interest rates. I can only say that it's determined by the LVR, that means the loan to value ratio. So if you are going to borrow up to 65 out of your property value, usually the interest rate starts from 3.88% per annum for principal and interest repayment method. If you would like to go for interest only repayment method, it will be starting from 4.18%. The maximum loan amount you can go to up to Australian dollars 1.5 million. And the long term is usually 30 years. And I always recommend people to do 30 years because if you want to reduce it to like 15 or 20 years, you are just like paying much more each month. And for the perspective as an investor is not very good cash flow to all of you. And then regarding the fees, actually the fees are quite standard. There will be valuation fees, which it would be costing like $200 to $500, depending on your house value. And the lender's legal fee usually is within $1,000. Settlement fee usually is like $450 or $550 Australian dollars, and the annual package fee. Annual package fee I'll talk about in the next page. So usually for financial institutions loan product, they can come with some facilities which cost you the annual package fee like $499 something each year. So the most useful facility, I believe, for a loan product would be the offset facility. So I'm not sure if in other countries there are offset facilities as well when you deal with a loan. In Australia, you can always make good use of the offset facility to help offset the interest incurred in your loan. As long as you put more like savings or money in, and then it can reduce the amount of interest you pay every month. It can help you pay your loan off faster. And the most important part is that if you put the money in the offset account, it's actually treated as a everyday transaction account. So it's actually easy to access. You don't need to worry about like whether you put in money today and then tomorrow you want to withdraw it, there will be cost. No, there's actually $0. So it's actually quite easy, and also it helps with the negative gearing. So that's why it's actually a good facility for investors when it comes to a mortgage loan application. So regarding the documents required for application, most of all for all applicants, you definitely have to provide your 100 points ID, your passport, your country photo ID, like your country identification card or your driver license. And then you will have to provide your personal credit check report issued by the relevant jurisdiction. So I believe each country, they will have their official jurisdictions that can help you get your personal credit check. And then if you are going to purchase a security in Australia, you need to provide the full contract of sale, the fully exchanged one. That means you have to sign the contract first before you'll be able to apply for a loan. And then you'll have to show the evidence of funds to complete the purchase. So maybe you have savings in your own bank, and then you just need to provide the bank statement. And then here it comes to the income verification. it depends on whether you are a salary and wage earner or if you are self-employed. That means you have your own company. So if you are self-employed, if you are a PAYG earner, that means you are a salary earner. You just need to provide the most recent 3 payslips, so 3 months of payslip, and also 3 months of bank statement showing salary crediting, and also your everyday transactions. And also, if your employer doesn't generate the computer-generated payslips, alternatively, you can provide the employment contract, or there will be a fixed template that will be able to provide you, and then you just need to let your employer to fill out the detail regarding the employment detail. And then if you are self-employed, most generally, you have to provide your personal tax return for the past 2 consecutive years, your company's tax return for the past 2 consecutive years as well, and then the profit and loss statements and balance sheet, and also 6 months of the business bank statement and 6 months of your personal bank statements. I know this sounds like lots of information, but you are welcome to contact me or contact Ernest after this webinar if you would like more information regarding details for loan application. It's a bit frozen. Okay, so here are some crucial points we are going to talk about during loan application. So first of all is valuation. I'm not sure if in other countries, when applying for a loan, you have to order valuation. I have to say that like lender orders valuation on behalf of you. So they always invite a third-party valuation firm to complete the certified valuation report for your security. So sometimes it can mean that the valuation results can be variant. Not 100% relates to your contract price, but lender will always have to use the valuation result determined by the valuer to determine your loan to value ratio and your loan amount. So that will have a few different consequences on your loan application. So first of all, your loan amount may be decreased, and that means your loan to value ratio will be decreased as well. Then the interest rate might be different. Like I said just now, if you are applying for like 65% LVR, the interest rate would be like 3.88. But if the valuation comes back lower, and then that means if you would like to still borrow that much amount of money, the percentage would definitely go up, and then your interest rate might be increased. And as we all know, like even though the restrictions has been easing and then Australian border has been reopened, there are still impacts from COVID-19 in Australia. So first of all, there are, regarding the real estate market, the established property market instead of brand new property market. In the past few years, like we said, during lockdowns, there will be vacancy rates of the rental apartments. The vacancy rate was increased, and then some investors might find it not the perfect deal, and then they are trying to sell their properties. And then for the second-hand markets, and then actually the price was a bit different compared with the brand new market price. So that's why this might be an impact from COVID-19 and also the economy. This will have an impact on your brand new properties valuation result as well, but we have to bear in mind that it doesn't necessarily reflect the true value of the brand new apartment buildings. And then regarding this, the mitigation, I always recommend clients to consider preparing more cash to complete the purchase, and also have to consult with your financial planner or mortgage broker like me, or real estate agents like Ernest regarding the solution before you make a well-informed decision. So basically, that's everything I'm going to share with everyone today. So you're welcome to, if you have any questions.
Yeah, well, thanks, Monique. Your sharing was actually very concise. You tried to make a very I wouldn't use the word complicated component of property buying here in Melbourne or in Australia per se, but it's very complex. There are many parts to this equation, so to speak. And in order for the process to move smoother, working with the correct party becomes very important. The correct party such as yourselves, because you know the ins and outs, and what's important. I just wanted to take you guys back to one slide. I think this part here, Monique, I know you mentioned it a little bit just now. It looks as though it's very simple. There's 4 parts to the equation just to get the loan. The valuation is an issue. Then after that, the interest rate is an issue. The mitigation is an issue. That's why working with the correct partners, very, very important. Would you say that, Monique?
Yeah. So usually, if investors are going to enter into a contract, so they will have to go through with real estate agents first regarding the details. They have to go through the contracts with the with solicitors regarding all the the details in the contract. And regarding the loan solution, I always recommend clients to go through with me. So I need to know more about the client's A&L, like asset and liability and income position, their requirements for the medium term or long term, so I can recommend a solution for them. And especially for clients, if they are going to apply for a loan with higher LVR, it's actually there are many parts we have to pay more attention to. So usually during this period, it's up to clients if they would like to apply for a pre-approval or conditional approval with lender first. So at least lender can check their A&L position, their income position, to issue them conditional approval to make sure they'll be able to borrow that much of money before they enter into a contract.
Ladies and gents, I have to interject here for a little bit just to address a question that was sent over to me. Although Monique and I are talking about mortgages, focusing mainly on foreign buyers per se, Monique and her company also does loans and mortgages for local Aussie residents and citizens as well. So she's able to help anybody across the board. If you've got actually an interest to purchase a property and you need financing advice, whether or not you're an Aussie PR or citizen or foreign national, not a worries. Monique will be able to help you with the questions, with your questions, I mean.
Thank you very much for adding for me. Yeah. I'm too focused on the slides.
No, it's not. One of the questions came in is I think the viewer is actually a local, asking whether you only do work for foreign nationals only.
Okay. Yeah, right. I can provide like mortgage consultation services and mortgage loan application services for all kinds of customers, not only pure foreign investors. I can also help. I actually help lots of like Australian expats and pure local customers as well. And even though if you are like temporary visa holders, there are always the correct products that I can recommend for you.
Monique, I have also some other questions that have been raised here. Is the best deal the lowest rate in a mortgage package? Is that what you consider as the best deal?
I would say the best deal is always the suitable solution for clients. So like, for example, if you are going to borrow a very high LVR, of course, the rate won't be low. There might be like other fees you need to pay with lenders. If you are borrowing more than 75%, I reckon there will be a 1% risk fee if you are borrowing more than 75% as a foreign investor. But it's up to clients if they feel this is necessary for them. And I'll also give them some advice to make sure this is not an unsuitable product for them. So actually, the lowest rate product is not necessarily the best deal for them.
Thank you so much. I have another question as well with regard to 30 years is actually, you mentioned 30 years is the longest duration for a loan. Is this age dependent on the applicant? So just say the applicant is 50 years old. I mean, 30 years makes them 80. Would that still be applicable?
Yeah, that's a very good question. So actually, for a 30-year long term, it's actually quite general when we apply for a loan. But of course, if the client is approaching retirement age, if they are able to show that they have passive income even after retirement, so say that they have other rental incomes, existing rental incomes in Australian property markets, or if they have rental incomes or other investment incomes in their home country, if they are able to provide evidence to show that after retirement, they can still maintain their lifestyle, they will still be able to make repayments for the loan, actually we can still get a 30-year long term. But of course, yes, if they are approaching retirement age, this will be quite sensitive and need more mitigations.
So basically, as long as you can show that you have a cash flow still coming in post your retirement age, then you're able to still get financing.
Yes, correct.
Okay. I know that a lot of people who basically have their own businesses, they're not going to retire come 55 because the business is an ongoing concern.
Right.
So this is definitely another way to do so as well.
Yeah, absolutely.
Yeah. I have a question here from Chanai Ching. The question is like, are there charges to secure a loan through your services? In the Malaysian banks, there isn't one, but in Australia, are non-banks going to be charging charges on the applicant?
So like I said just now, right now, most lenders, they are offering products with much lower and standard fees. So before, they always charge risk fees when it comes to non-resident loans. Right now, just now I put an example. If your LVR is lower than 75%, then there are only standard fees, like valuation fees, lender's legal fee, or settlement fees and annual package fee. If you are borrowing more than 75%, there will be a 1% of the loan amount being the risk fee. And that will be charged once off as settlement. And there will be no more fees in the future, just the annual package fee, and also the discharge fee might be $250 to $400. It's also once off when when the property is discharged, like when you pay off or when you refinance to another financial institutions.
Is there a difference between financing off the plan and also financing ready to move in properties?
Okay, yes, definitely. If you are going to purchase an off the plan property that is settling 2 years later or something, then it means there is nothing you can do now. So you have to wait until there are only 2 or 3 months before settlement. And then that's the timing when you need to apply for a loan.
Meaning that you cannot apply for a loan, even though it's off the plan, you cannot apply for the loan now for 2 year settlement from now?
Right, you can't. So if the off the plan is going to settle 2 years later, there is nothing you can do. But you are going to if you are going to purchase an apartment that's like ready for settlement within 2-3 months, it's definitely necessary to apply for a loan now.
Okay, I understand. One question came up is, what is your maximum LVR that you can do, that you can accept?
For a non-resident loan product, the maximum is 80%.
80%.
Yeah,
so,
80%.
So, ladies and gentlemen, for those who are watching today, 80% is the highest, but at the same time, because of also the risk, I presume the rates will also be a little bit slightly north of the lowest rate possible. Would that be correct?
Yeah.
Okay. Can I ask you, is there a penalty if you actually settle early? So if you've taken a 30-year loan, 30 years is already granted, and say in year number 7, you want to settle early, is there like an ability for the borrower to settle?
Yes, absolutely. It depends on the loan products you are choosing. So most often, non-resident loan products are variable rate. So for variable rate, it means that you can always pay off the loan at any time, or you can make a lump sum repayment at once, and then or you can refinance at any time. So if it's under variable rate loan, you can always pay off at any time without penalty. Like I said, there will be only a once-off discharge fee, like $250 or $400 or something.
Right. Okay. Do foreign buyers need to buy LMI insurance for their loans?
No, not at all. For LMI insurance, it's actually only charged when you borrow for more than 80% LVR. And like I said, it's actually a totally different sector. for local products, local resident loan products and non-resident loan products. So for non-resident loan, if they are going to charge something, like I said, more than 75%, usually there will be a 1% of the loan amount being the risk fee. So usually they are called in different terms, but you can also consider it as some part of mortgage insurance premium, but it's paid once off.
Right. Okay. One question that was raised here is that, is there a difference between borrowing under an individual name as opposed to borrowing under a family trust setup?
Okay, very good question. That's definitely a local resident question because for family trust, I'm not sure if non-residents can establish a family trust in Australia. If they can, I'm pretty sure in most non-bank lenders, they can only accept applicants being individuals, not under companies or not under family trusts. I know before, like a few years ago, some overseas investors, they managed to set up their own company and purchase the properties under the company's name. A few years ago, there were still mortgage solutions, but right now it's very difficult, almost no solution for those.
Okay. The question that was raised by Lam, for 80% loan, what is the prevailing rate for 30-year tenure for non-resident? Is there
For 80%, I reckon the interest rate would be high four, like 4.88 or something, or can be even higher. And because we all know like those are variable rates, so that can be changed at any time. It's actually determined by a lender's policy, the Australian economy or market decision. But right now, the advice I can provide is based on the current policy. So right now, 80% LVR for non-resident loan is actually high 4. And low 5, yeah.
Is there like any difference between financing, say, land and home package, 80% LVR, as opposed to a ready-to-move-in apartment package, 80% LVR?
It's actually quite different. So if we talk about how to apply for a loan, it's actually the same process, so same documents required. But for house and land package, we can only make interest-only repayment during constructions. And then we usually apply for land and construction loans together at the same time. But usually the construction cost will be retained during construction, and there will be progress drawdown. So during progress drawdown, like each stage, there will be a new invoice and then lender pays for you, and then your loan balance will be increasing. So each time after a new invoice is paid, your monthly repayment will be readjusted. So the repayment method will become principal and interest after the construction is fully completed.
But are the interest rates for house and land better than interest rates for apartment mortgages, or are they the same, or does it matter?
Almost exactly the same.
Right. Okay. I have a doomsday scenario, so to speak, for an investor that raised this question, just in case if everything goes south and the buyer just cannot pay anymore and has to give up the property while under financing. What then happens?
Usually, I believe clients would know this situation long time ago before it moves to the worst scenario.
Okay.
So say that you won't be able to make repayments on time. For local residents, they can always apply for financial hardships through the banks. For non-bank lenders, I don't think there is a solution like this. So if you know that you won't be able to make repayments, you definitely need to contact a real estate agent to put it listed on the market to sell it. And then if you can't just say that this month you can't make repayments, and then there will be default rates. The interest will be charged much higher for your loan balance. and then there will be when it comes to default and when it comes to deferred payments, your lender will contact you very soon. Because you are not I believe like for non-resident investors, they are not Australian residents, so they don't have credit records in Australia. So there will be no impact on their home country because it's not connected. But if you can't make repayments for 2 to 3 months, I believe the lender would just like take your property.
I think this is a similar situation anywhere in the world. It's not just unique to Australia, but because the loan is in default, the lender will definitely be utilizing whatever parts of the contract for the loan to exercise their right to retain or regain back the amount that they've lent you as well.
Yeah, that's true.
Okay. One other question is that, do mortgage brokers charge a service just to have a chat, whether they can borrow or cannot borrow? Do you charge for that?
For consultation, it's always free. It's free of charge, right?
What do they need to know, or what do they need to have before they come and speak to someone like you?
At least they will have some idea regarding their budget. At least they know how much savings they are going to have to use to complete purchase. So they'll know how much they would like to borrow. And then if they can tell me regarding their income and liability position, then I'll be able to calculate the maximum loan amount, the loan capacity based on their scenario, and then I'll be able to provide mortgage solution for them.
Okay. Ladies and gentlemen, just to share with you again, if you've missed that earlier part that I shared earlier about what Monique can do, Jalin Realty, basically we operate throughout Pan Asia and also very much focused in Victoria. So for any of your real estate needs in Australia, particularly in Victoria, we'll be able to help you. You can always reach out to us. But in terms of where Monique and QA Finance stands, anything in Australia, I think she's able to give you guys a hand, either in terms of financing off the plan or even ready to move in. And also, I think refinancing. I think the last time you also do refinancing.
Yeah, refinancing is also a very good option for non-resident investors who's already had a property or with a mortgage loan in Australia. Because if they had a mortgage loan a couple of years ago, I believe currently the interest rate could be very high for them. And on the market, there are always a better choice for them to choose a better product. And it might not be that expensive as they believe for the refinancing costs, just like the standard fees I mentioned just now.
Is there any particular promotion right now for them to take action? Would you know of any?
Right now, I believe the interest rate is always the best weapon or the best solution for them. Right now, like I said, the interest rate is still historically low, so it's still a good timing. No matter if you find a good property you would like to invest in, you would like to go for a loan, or if you would like to refinance for better rates, it's always a good timing to do that.
Okay. And of course, for some of our viewers, in Asia particularly, where they usually go directly to a bank when they want to secure a loan, Monique, can you just share with me maybe one or 2 minutes of your thoughts as to why consider using a broker to begin with rather than just going directly to a bank, a Big Four here?
Right. So to a bank, at least that means you have to visit different branches to compare products. But with a mortgage broker, I have accreditations to most of the financial institutions and most of the banks in Australia. Of course, for some like Singapore, Malaysian clients, they might have other mortgage solutions through their own local banks. The rates might be better or worse, we never know. But the LVR is definitely a little bit lower than that. From what I know, the LVR the local banks can provide, like in Singaporean bank or Malaysian banks, the LVR is actually much lower, or sometimes you'll have to deposit a lump sum with them for like 3 months or 6 months before you can apply for mortgage. And also for other banks, for non-Australian banks or Australian banks, you can't choose a valuation firm to do the valuation for you. But if you go with financial institutions, you can nominate a specific valuer to do the valuation for you. As we mentioned, the valuation is very critical when it comes to loan amount. That means if you are going to apply for a loan that's like just a little bit of LVR, then even though there is a much variation for the valuation results, it doesn't affect you. But if you would like to apply for a loan that's like 70% LVR or something, that means the valuation result is very crucial to your application. Then at this moment, you might need a mortgage broker to help you apply for loans through financial institutions where you can nominate your own valuer to get a better result for you.
Well, this one, ladies and gentlemen, you can take it on heart. Monique and I share a common story for some of the clients that we particularly worked on, where the client has a specific requirement in terms of a loan size that's required. So working very critically on all the parts actually starts off with having the correct discussion with your mortgage broker and for them to know your financial position. Only then can a strategy be devised as to how to best approach it. I can say one thing for some of the experiences that we've gone through, Monique, you get a valuer that basically doesn't give a valuation that's required, it definitely will impact the loan that's going to be offered, and it definitely will impact your ability to purchase the unit.
Yes.
That's what I've seen. Yeah.
Yeah. And I also saw a question regarding for house and land, the loan needs to split land and construction. Very good question. So for land and construction, there are two split loans. So there will be two loan accounts, but you apply for the loan at the same time. So basically, if it's a house and land package, so that means even though there are two split contracts, so two-part contracts, but there will be the valuation will be done as if it's completed. So actually you apply for the loan for land and construction at the same time. So of course, if you are only purchasing the land now, you don't have the construction contract, you can absolutely apply for only the land loan. But the solution would be different. For some financial institutions, when it comes to non-resident loan, they don't accept a pure land loan. You have to have construction contract together to apply for the loan. So even though there are two split loan accounts, you apply for the loan at the same time.
Right. Right. Thank you so much for tuning in, ladies and gentlemen. I wanted to say thanks to Monique for spending time with us and for her to share with you what I think is very intimate knowledge and how mortgage brokers work behind the scenes to help you achieve your financial goals through purchasing the right property here in Australia or getting the financing for the right property in Australia. And where Jalen Realty sits is to help you find and uncover that right property, particularly in the Victorian state of Australia and also Melbourne in particular. So Jalen Realty actually has quite a lot of access to brand new properties, be they land and home packages, and also ready to move in apartments, focusing in the CBD area or the Greater Melbourne City area. So do connect with us just for a chat if you want to see what your options are. And if you'd like, also speak to Monique and her colleagues at QA Finance to actually find out whether and what your aspirations are will be able to be met based on your financial situation. Last but not least, Monique, I just wanted to also ask you, in your opinion, what are the biggest challenges you've seen so far that people will not be able to secure the loan? I mean, where's the biggest area that they fail most often?
I haven't seen a loan fail before. I haven't seen a loan decline before unless customers don't have enough money to complete purchase. So basically it's because of valuation, I believe, or sometimes like people's income. There are major parts of non-based income, and then the verification method the lender has is actually quite different. So say you are earning bonus, and that actually comprises a major part of your annual package of income. Some lenders, they're required to see consecutive 2 years of evidence showing that you actually receive your bonus once a year for the past 2 years. But if you only have 1 year, that means it's not acceptable. If your income is quite behind after the deduction, that means you won't be able to borrow that much but they won't decline your loan all of a sudden. They will just ask you if you would like to reduce your loan amount to that much. But at the same time, if you don't have enough funds to complete the purchase, that means like there will be a big no for this loan application. So usually there are two parts. One is the income verification. The other part is the valuation.
Okay, great. Well, give me a few minutes. I just want to share a little bit about Melbourne CBD and why Melbourne, Monique, and then we'll jump right back in terms of our discussions and for your last closing thoughts. So, ladies and gentlemen, we've been looking at Melbourne CBD, or what we're focusing on is mainly the Melbourne CBD. And as what Monique has actually shared with you earlier, Australia has reopened. And I think the latest report I've read is that 1,000 foreign students have been arriving every week into Australia, or sorry, not every week, every day. Sorry, that was the last one I read, every day. That means that the take-up rates for vacancies are definitely going much higher. And what Monique has shared earlier is that the rental rates definitely have gone up. And my personal viewpoint is that, and Jia-Ling Realty also has a property management section, a lot of the owners are not locking in 12-month contracts. They're looking at 6-month contracts or even month-on-month contracts just to make sure that they time it right and not lose out. I was just speaking to a buyer just 3 days ago from Malaysia, and they have an apartment in Melbourne, and they just locked in a contract for 2 years. They locked in December last year for 2 years. And the rate that they locked in was $350 a week. I just showed him a website. You can check many property portals here. And I just showed him, just go to the website, check the property, what is the rental rate right now? It's $470 a week. So he's losing out $100 a week, multiply that for 24 months. And then he says, wow, I was told in December, it looked quite bleak. So he took that option. So that's why a lot of owners right now are saying, no, I want to cut my tenancy very short just to time it better for cash flow purposes. Again, international student arrivals set to pick up, and a lot are already arriving, as we've seen. Jobs, Melbourne CBD area is still where jobs are going to come in. Jobs drives the economy, drives the demand. And you don't want to be commuting an hour. I know that in lots of places in Asia, commuting 1 hour is not a problem. But in Melbourne and in Australia particularly, commuting 1 hour to get to work one way and 1 hour to get back is not the lifestyle that you see very often over here. In fact, in the smaller towns, not say smaller towns, in the smaller cities, point to point, 10 minutes. In Melbourne, it's everybody wants convenience. The driving factor here is a lot of it is convenience per se and lifestyle, right? Jobs, again, key areas in the Melbourne CBD area, all showing positive growth for the next 20 years, okay? This data is actually from the Economics and Planning's unit. This is actually a snapshot of all the developments that's happening within the CBD area. The green ones is where the permits have been approved. The yellow ones are when the developments are actually under construction. However, given that a lot of builders right now are having challenges, coming onto the market is going to be very, very challenging as well. A lot of these projects are delayed. So what that means is just upward pressure for two things. The one that's ready-made stock, there's going to be upward pressure. For the stocks that are in the process, slightly longer in terms of duration of delivery. So again, there's going to be upward pressure in terms of rental yield and also capital appreciation. Okay. And this is the East Tower. We're looking at, this is a land lease development, the East Tower. And this is actually a very good development that's right doorsteps to the Southern Cross train station. And essentially, this is actually within the CBD area where the lifestyle is literally at your doorsteps. And property prices that are still available starts from about $450,000 onwards for a one-bedder. Okay. What Monique has said, vacancy rates, and this is actually from Google. Just wanted to share this with you. On the 5th of August, when I did the check, it shows 10.4% vacancy in the CBD. This was done 28th of February, 3.2%, and it's now even lower already. So which means that if you haven't locked in your rental rates, it's going to be painful. More money coming out. Okay. This is a video that I won't bore you guys with this, but essentially, ladies and gentlemen, I think what Monique and I are trying to say is that, don't wait to buy real estate and wait, but make sure you get the right advice and financing, because all it takes is one misstep you lose that opportunity, you aren't able to grow your wealth, and ultimately, it's going to take you longer to get to where you want to go. And for those countries that I have a message here from, again, Chan I-Cheng, with regard to the Ringgit Malaysia. I completely agree with you, I-Cheng. The Ringgit Malaysia is in a position right now that is very challenging. It's 3 to 1, I think, or 3.10 to 1 Aussie dollar. For those Singaporean viewers, it's 1 Sing dollar to 101 Aussie dollar. So Sing dollar is much stronger as well. If you don't have an international exposure, it's going to be very challenging to fund your international requirements of goods and services in due course and due time. So my strongest advice is take advantage when you have it. Start, making hay when the sun shines, when you're still able to. And of course, speak to professionals like Monique and her colleagues at QA Finance. Whenever you need any questions answered, she'll be definitely there. If you need her number again, I'll just flash your details again, Monique, so at least so that they'll know. Yeah. So this is Monique Jiang. This is her details. If you miss this, if you can't see this, just get in touch with me or anybody at Jalin Realty, and they'll be able to direct you to Monique, because we work very closely with QA Finance, and we only work with people who are as committed as us to get things done and done right. Thank you so much, Monique. Thank you again for your time.
Thank you so much for having me today. Thank you.
All right. So have a great weekend, everybody, and I'll catch you soon. Thanks, Monique. You take care.
Yeah. Bye. Bye-bye.